Trump just told the AI giants, "You like cheap power? Great. You're going to pay for it. We're talking up to $15 billion in new power plants, locked in for 15 years. Funded not by your electric bill, but by Microsoft, Amazon, Google, and the rest of Wall Street's favorite toys. This is the first real fight over who pays for the AI boom, you or the trillion-dollar club. Let's unpack what just happened and what it does to your portfolio." Welcome back to the comment section with Thomas Paul, where we read the fine print so you don't get wrecked by the headline. Here's the setup. The Trump White House and a block of 13 governors just leaned on PJM interconnection. That's the giant grid operator that keeps the lights on for about 67 million people in the Mid-Atlantic and parts of the Midwest. The demand? An emergency auction to fast-track new power plants. The idea is simple but brutal. AI data centers are exploding power demand, so instead of quietly shoving higher costs onto households, make the tech giants sign long-term 15-year contracts that could bankroll up to $15 billion of new generation. So instead of, "Congratulations, your bill went up again because of AI," it becomes, "Congratulations, big tech, you get to underwrite the grid you're gorging on." Here's the first twist. PJM didn't just say yes. The operator came back with a more cautious plan. Basically, "We see the problem, but we're not jumping straight into a political fire drill." So there's already a tug of war between the White House screaming emergency and the engineers saying, "Let's not blow up the market to fix it." If you're wondering, is this real money or just political theater? Remember this. Consumers have already paid billions in extra charges in recent years for capacity that still hasn't delivered all the plants needed. So voters are already feeling it. This time, the plan is to flip the bill to the companies actually driving the demand. Hold that in your head. Billions already charged, more billions needed, and now the question is, who gets the next invoice? Let's talk about why this is happening right now. AI and data centers are on a power binge. Every flashy AI everywhere announcement is really code for, "We're plugging another industrial-scale heater into the grid." Load forecasts in places like PJM have flipped from flat to steeply rising, driven by AI training clusters, data centers, and electrification. At the exact same time, Wall Street is pricing AI as the magic growth engine for Microsoft, Amazon, Google, and every data center REIT. Regulators have been quietly freaking out about this for a while. The Treasury Department, global financial watchdogs, and things like the Financial Stability Oversight Council have all flagged AI as a risk factor, not just because of algorithms, but because of energy use, infrastructure stress, and dependence on a few providers. Since at least 2023, reports have been saying, "Hey, if we concentrate compute and power like this, we get new systemic risks." This PJM push is one of the first big political moves that says, "Okay, then big tech, you're going to help pay for the fix." Here's the part nobody's really saying out loud. We sold AI to investors as software margins forever. No one put massive power plant capex on the slide deck. Now, politically, this is being framed as populism with a spreadsheet. Trump gets to stand up and say, "Your bills are high because of these AI guys and this faceless grid operator. I'm making them pay." And it's not just Republicans. Some newly elected Democratic governors are signing on because they ran on affordability and they've seen those bill spikes in their own states. So we get this weird, rare cross-party alignment. Beat up on big tech and the grid operator, protect the voter. Even the tech companies know which way the wind is blowing. Microsoft has already agreed in some regions to pay higher power rates tied to their data centers. Amazon has been very eager to talk about supporting infrastructure investment. Translation: they're not fighting the idea that they'll pay more. They're negotiating how much, how long, and who controls the terms. So the real battle is not, should AI pay more? It's, how much can they push onto customers and how much sticks to shareholders? Let's walk this straight into your portfolio, because this is where it gets fun. First, the obvious one. Big tech margins. If Microsoft, Amazon, Google, and friends sign 15-year power contracts at higher prices, that's a slow, quiet squeeze on their AI profit margins. Not enough to kill the story, but enough to take a little air out of the infinite upside narrative. Second, Utilities and independent power producers. If this emergency auction or something like it happens, you're talking tens of billions in contracted revenue over a decade and a half. That kind of locked-in cash flow can change earnings trajectories for the right utilities and merchant generators, especially those already building near data center clusters. Third, bonds. Who funds 15-year power deals? Debt markets. Utilities issue bonds, project finance gets raised, and suddenly credit investors are looking at a pipeline of long-dated utility-like cash flows backed by big tech contracts. That can move yields and spreads in a way equity investors tend to ignore, right until it isn't ignorable. And fourth, the nightmare scenario. Grid stress or blackouts if we screw this transition up. An AI-driven power crunch is like inventing a new kind of OPEC, but for compute. If electricity becomes the bottleneck, everything from data center REITs to chip makers to cloud platforms can hit a wall at the same time. Markets are still mostly pricing AI as a one-way tailwind. The energy and regulation drag is only starting to show up. Quick reframe. Everyone's chasing the next NVIDIA. Almost no one is asking, who keeps NVIDIA's servers turned on when the grid is maxed? Now zoom out. This is happening against a backdrop where the Trump administration has spent 2025 rolling out big executive orders to remove barriers, centralize AI policy, and keep US AI dominant. That helped unleash trillions in AI-linked investment, with the story that America would be the AI capital of the world and government would mostly get out of the way. And now, same White House, different side of the coin. Clamp down on AI's grid footprint, force cost sharing, and treat AI as an energy hog that needs rules. That tells you something important. Even a pro-AI, growth-first administration will regulate once voters start feeling the side effects in their power bills and inflation. At the same time, Treasury and other agencies are working on AI-related financial and cyber risk. So anyone assuming light-touch AI rules forever is betting against both politics and physics. Sooner or later, the bill comes due. If you're still here, this is where we turn it into a simple cheat sheet. Potential winners, regulated utilities with heavy data center exposure, the boring names that get to sign long-term contracts with tech giants, power plant builders and equipment suppliers if these auctions go through, and parts of the bond market that get high-quality, long-dated deals backed by essential services and big tech demand. Potential losers. Over-levered data center REITs if power costs spike faster than they can reprice leases. AI megacaps if they're forced into expensive, inflexible contracts that eat into those beautiful cloud margins. And yes, households, if the policy fails and bills keep rising anyway because we didn't build fast enough or design the incentives wrong. And remember, none of this is law yet. PJM still has a lot of power here. State regulators still have to sign off on projects, permits, and cost recovery. The shape of this thing comes down to three moving parts: how fast load forecasts rise, how quickly permits and construction can catch up, and how aggressive the eventual auction or contract design is. If you want the simple investor takeaway, don't just track the AI stocks. Track who's getting paid to keep them plugged in. By the way, this whole video you're watching right now was created with Fludge.io, the same system that powers this channel. If you're thinking, I'd love to run a channel like this, but I'm not getting on camera, that's literally what it's built for. It researches topics, writes scripts, builds the AI avatar video, even uploads to YouTube. You stay in control, you approve, you steer the style. No camera, no editing, no 50-tab research rabbit holes. If that sounds interesting, check out Fludge.io. To close this out, for the first time, Washington is treating AI not just as a tech revolution, but as an energy and financial stability problem with your monthly bill on the hook. This PJM fight is just the opening round. You're going to see more battles over who pays for chips, power lines, data centers, and security. Taxpayers, big tech shareholders, or everyday consumers. Smart investors will stop asking, is AI the future? And start asking, who's actually paying for that future, and on what terms? If you found this useful, hit subscribe so you don't miss the next time Washington, Wall Street, and AI collide. And drop a comment. Who do you think should pay for AI's power binge? Taxpayers, big tech, or someone else entirely? And quick disclaimer, nothing in this video is financial advice. It's for education and commentary only. Talk to a licensed professional before you make any investment decisions.